What might happen to Tesla stock in 2023? Even specialists are torn on whether Tesla will take off from here, or will the organization at last face its end? Still, some stay hopeful about the organization's future. Essentially, for the close to term, you certainly would have zero desire to miss the basics are uncommon. The issue is all the commotion. Future asset overseeing accomplice in Tesla bull Gary Dark as of late told CNBC Gary Dark, the overseeing accomplice of venture company The Future Asset, as of late said on Musk's virtual entertainment stage that some EV purchasers don't need contention in that frame of mind of vehicles, and at the edge might pick an alternate EV brand to stay away from. This, as many know, Tesla's stock cost is at an unsurpassed low. As a matter of fact, many accept that Tesla shares experienced the most horrendously terrible year ever, and that 2023 thoroughly searches, considering the specialist caution that assuming you think 2022 has been a difficult year for Tesla stock with shares down 65%, reconsider and set yourself up for more. Tesla, in spite of the fact that it stays to be the main EV organization in the EV area, faces various elements in the two Uber markets it serves, yet in the two cases they amount to sizable key difficulties for Tesla in 2023. The two Uber markets for Tesla are in North America, and wherever else all through North America, EV rivalry remains moderately light, and in the US, new EV credits ought to reinforce Tesla's interest in 2023. Anyway, the remainder of the world is an alternate matter out. And now China's EV appropriations end before the current year is over, and a few European nations are likewise cutting or rejecting appropriations. Simultaneously, rivalry is sloping up across Eurasia, particularly in China. These two expansive business sectors really do share one thing: a frail economy. In the new year will burden EV deals. Overall, Tesla's expensive contributions are especially helpless against a cool down. The brakes are shrieking on EV requests. Morgan Stanley expert Adam Jonas wrote in mid-December, Inside Cars, we accept the change yet to be determined of supply interest for EVs can possibly shock financial backers. That said, Jonas and a few different examiners see Tesla cost cuts in the approaching year, getting from out-and-out cuts or different limits in late 2022, a drop in Tesla's worldwide normal offering cost to around 50. $000 in 2023 from 535,500 in Q3 22 doesn't seem unlikely. Bernstein investigator Tony Sacconaghi as of late composed these variables alongside worries about Chief Elon Musk's concentration since his $44 billion Twitter takeover have sent Tesla stock plunging as 2022 breezes down and 2022 breezes down in 2020. Investigators expect Tesla profit per offer to grow a cooler 40 to 5.66, with deals up 42% to $118.2 billion. That is major areas of strength for yet the time of triple digit development, and the possibility of limitless interest that long-filled Tesla stock might be over. In the meantime, the organization faces dangers to the disadvantage today. Regardless of the various issues and quandaries, Tesla stays the world's biggest creator of completely electric battery EVs with a directing BEV lead in North America, yet China EV Goliath by BDF currently far above Tesla, and BEV and module mixture FEV deals consolidated will probably surpass its US rival in worldwide BEV conveyances. In 2023, still Tesla stays the most productive EV producer until further notice because of its high vehicle costs. While we see 2023 is a difficult year for the EV producer completely, we accept Tesla's hold to rivalry can extend. Morgan Stanley's Jonas has said. In a December 24th tweet, Gary Dark said, we are diminishing Tesla 2023 EPS to 6.30 from 7.20 in 2023 vols to long-term over year to mirror discounted worldwide SAR S gauge 68 million versus 75 million, and a decrease in 2023 ASP to 52.1K from 57.3K. We discounted our 2023 auto GM rate to 28.5% from 29. Our new LTV for PVO. Dark made sense of that financial backers ought to decipher the lower 2023 profit out year estimate and lower PT circulating in favor of traditionalism. Given the unsure monetary climate, we share Elon's view that the Federal Reserve is committing a gigantic error by pushing loan fees higher as expansion keeps on blurring. Dark said still Tesla stays the prevailing EV producer in the US. As a matter of fact, 65% of the 525,000 enrolled EVs in the US were Tesla vehicles through the initial 9 months in 2022, as per information delivered in November by SP Worldwide Versatility. The first Fremont plant has fundamentally expanded creation numbers. It tends to be noticed that the Fremont plant makes the Model 3 and Model Y, as well as the Extravagance Model S car and Model XUV. Fremont processing plant can deliver up to 550, 000 Model 3 and Y vehicles a year. As per Tesla, it likewise has the ability to move toward 100,000 Model S and Model X vehicles. The Fresher Austin website has an arranged limit of 250, 000 vehicles. Tesla Austin is as of now increased Model Y yield, which ought to assist with benefiting edges as the plant approaches limit. Additionally, the Austin plant is set to make the digital truck when the vehicle comes online, maybe in mid to late 2023, yet the frequently deferred truck isn't probably going to be a volume giver 1 year from now. Tesla is additionally concluding designs to fabricate an auto gathering plant in northeastern Mexico. Bloomberg detailed for this present month Tesla deals are supposed to rise essentially in the US 1 year from now. Tesla ought to get a lift in 2023 from new EV tax breaks of up to $7,500.00 per vehicle from the Expansion Decrease Act. IRA pay and vehicle cost covers anyway could restrict Tesla vehicle and Purchase or qualification, the EV credits limit qualified cars to costs of 555, 000 or less, with pickup trucks and SUVs covered at 80. $000 Tesla will probably make extremely durable cost slices in the US to meet all requirements for IRA funds. Bernstein Secondagi composed the EV attributes just apply to vehicles collected in North America that bars imports, for example. The Ion IQ5 and EV6 with EV credits approaching many would-be Tesla proprietors have postponed buys or taken conveyance until 2023. Tesla on December 21st started offering a 7,500 credit on Model 3 on Model Y conveyances in the US before the year end. That is up from 3,750 toward the beginning of the month. The EV monster likewise is without offering supercharger miles as another motivator. Anyway, Tesla faces different difficulties. Outside the US, China, Europe, and different business sectors outside North America have numerous distinctions. Yet for Tesla, there are two creation centers. Shanghai, currently the greatest Tesla manufacturing plant, got a major limit extension in Q3. The more up-to-date Berlin region plant, in the meantime, has been getting creation. Shanghai makes the Model 3 and Model Y, while Berlin just creates the Model Y for T. Present, while China is an enormous Tesla market for nearby deals, Shanghai is likewise the EV Goliath's trade center point. Tesla sends some Model Y and many Model 3 vehicles from China to Europe, as well as to business sectors, for example, Japan, South Korea, Australia, and New Zealand. As the Berlin plant slopes up, that will assist with helping overall revenues, as in Austin anyway, that advantage could be counterbalanced, assuming that Berlin's higher result spikes creation reduces in Shanghai or value cuts in the Eurasian Uber market. Many might ask why Tesla doesn't transport vehicles to the US from abroad plants. This is on the grounds that Tesla sends out from Shanghai to the US wouldn't be productive due because of a 27.5% levy on Chinese-made cars. Hypothetically, Berlin could send out Model Y vehicles to the US. However, any unfamiliar-made Tesla EVs wouldn't be qualified for the new US tax breaks. As per experts' final quarter Tesla conveyances ought to arrive at 431,000. That would mean generally 1.34 million for the entire year, up 43% from 2021. Examiners are likewise projecting Tesla conveyances will expand 46% to 1.96 million vehicles in 2023. As per FactSet, even with headwinds and macroeconomic difficulties, Tesla Q4 conveyances ought to effortlessly outperform Q3's record of 343,830 EVs. That was up 42% versus a year sooner, however. Mist investigator gauges experts expect Tesla's profit per offer to grow 53% to $1.30 in Q4. Income ought to enlarge 51 to $26.6 billion bucks, generally in accordance with the Beyond 3/4. Tesla stock has no eminently lost in excess of 33% of its worth simply in December, plunging to a 2-year low. Tesla shares have plunged 70% from the November 2021 top, with the vast majority of that approaching since late September in the midst of interest concerns and Musk's Twitter buy. Still, specialists accept that Tesla is a decent stock to get one thing going for Tesla is its extraordinary RD and execution capacity. The organization has conveyed various developments and has created its strategy for getting around chip deficiencies. Effectively, Tesla oversaw chip deficiencies by supplanting the chips with substitutes and modifying its firmware. This empowered Tesla to oversee creation way more productively than most makers besides EV as an area will proceed to develop, and Tesla will be a gigantic recipient in spite of the fact that Tesla is confronting various issues today. The organization stays to be the greatest name in the realm of electric vehicles. It said it is in the post position to take advantage of this quickly developing business sector. Customers are progressively changing to these cleaner vehicles as stresses over the climate and guidelines developed for long-haul financial backers. Ongoing offer value shortcoming might be seen as an opportunity to get a deal. Other than specialists express that while others accept that 2023 doesn't look really great for Tesla, they are hopeful that 1 year from now will, as a matter of fact, be an extraordinary year for Tesla. Buy into this feed for more Tesla stock substance in 2023.